Hello, everybody. Gbenga Olatunji here. Performance management, performance measurement. As performance managers, it is critical for us to know much about management accounting. But the question now arises in which we are asked, even as students, how relevant is this management accounting knowledge in this our present world? The relevance of traditional management accounting systems in particular in this present age we are in. Over the years, actually a lot have changed, and also management accounting has changed too a lot. So we should know one thing, that for performance management, management accounting feeds directly into it, because it's one of the purposes of management accounting is to ensure data are being gathered, collected, and processed for meaningful information and meaningful development of information and decision making. So management accounting's purpose is to aid decision making by the managers. So gather information from different sources, or which we can call data, from different sources, and process into meaningful information to be used for business decision making. So therefore, management accounting will still be relevant. Even the traditional management accounting will still be relevant, because without traditional management accounting, there is no foundation for new techniques to be built upon. But how are we going to answer this? First of all, ensure you marshal your points as to the purpose and purposes of management accounting. In your answer, let them know that without management accounting feeding into performance management and performance measurement, hardly will a performance manager be able to perform anything. Also ensure in your answer that you marshal some traditional management accounting techniques, marshal some new management accounting techniques. Also, don't forget to marshal some criticisms against traditional management accounting and how the new techniques have overcome it. So, some of the traditional management accounting techniques that you will need to mention, like the absorption costing, the management marginal costing, marginal costing. You let them know the cost volume, profit analysis, standard costing, budgeting, budgetary control, variance analysis, standard costing, and the like, and how they've metamorphose into new ones, which we are going to go into details. But before we go into the details, let us know what are the criticisms against traditional management accounting. And among the critics, who is leading? We need to marshal all these points so that we can score the marks as much as possible. Before, traditionally, management accounting is built upon some premises, that there will be long production lines, manufacturing lines, and there will be standard production. Not now that customers, clients are being specific. They want customized products. Unlike before that, everything is so generic and traditional. So because management accounting systems were built on these premises, now one of the arguments is that it fails, that is traditional management accounting fails to help managers in latest modern production line, that in which total quality management, or JIT, that is just in time approach, are being used. Because just in time is as per the request of the client or customer is being produced. There is no storage space and the like. This is the pattern of production nowadays. So, and traditionally, management accounting techniques did not envisage this, even though it has been built upon. Also, it is argued that management accounting focuses on costs and cost control, cost reduction, and becomes less relevant when it comes to company increasing customer satisfaction. And when we're talking about customer satisfaction, a lot must go into the quality, service quality, delivery quality, the reliability of the product, the quality, the speed at which we exercise and serve our clients. Also, it is argued that traditional management accounting focuses more on manufacturing of less relevant information to service or services organization and focuses more attention on manufacturing. That is, service-oriented organization may not be able to use more of management accounting technique traditionally because much of its emphasis were laid on manufacturing and not services. So this is another strong argument when it comes to traditional management accounting not being relevant as at now. Also, it has limited value contribution to automated manufacturing, like just-in-time production line nowadays. So, limited value because everything then was in manual production, and they could envisage that standard products will be produced. But now we have automated machines that have series of products that they can produce even on the same line of machinery. So traditional management accounting didn't envisage this. But now we've built more techniques to absorb all these modern day production techniques and services. It is equally argued that traditional management accounting techniques emphasize more on direct labor costs. Meanwhile, now direct labor costs have metamorphosed into production overheads, machinery now, rather than direct labor. Last but not the least, but equally a very strong point against traditional management accounting systems and technique is that it is argued that it does not provide strategic management decision, especially decision making. It does not aid strategic management decision, especially when it comes to competitor, external environment, the externality, customers, new developments in the industry, new development in the environment, new technology in the world as it affects our businesses. So this is a very strong point when it comes to criticism about traditional management accounting. And notable among these critics is Mr. Robert Kaplan. Robert Kaplan leads the critics strongly. And the summary of his point is that production economy has changed. The need of the managers in business has changed while management accounting remains the same. That is to his own argument that the needs have changed, but the provision of information by management accounting and management accountants still remains the same. Therefore, he concluded that management accounting is not relevant in today's world. But we know that the argument is not strong enough, and management accounting has actually moved on to metamorphose into some strong, reliable, and modern day techniques like target costing, life cycle costing, product profitability analysis, segment profitability analysis, throughput accounting, backflush accounting, ABC, activity-based management, balance scorecard, and myriad of others. All these techniques, we are going to treat them in different videos. And let us move on into how to marshal our points in the exams. Mr. Kaplan proceeded further to advise that business world has changed and management accounting needs to look at aspects of performance within the organization and outside the organization, gather more relevant information for decision making even outside the organization rather than within the organization in form of product quality, service delivery, reliability of the product, after sales, customer satisfaction, and the like, because he is of opinion that the business environment has changed and traditional management accounting cannot fit into it and have an impact, and that management accounting just need to move on and provide more robust, more relevant information to today's managers' need, tailored to suit today's world, business environment. And how can we make management accounting relevant in today's world? How can we make management accounting more relevant in today's world? It is important for us to now know that non-financial information are actually of greater value now. Non-financial information must be looked into as well as financial information. But as management accountants for performance management services, we must ensure that we feed and gather more non-financial information as well as financial information. We need to look within and outside business environment, gather information as it relates to our competitor, gather information as it relates to even what our customer wants to buy. Look forward long term into the need of the nearest future of the organization, of the customer, what are the competitors doing, and ensure we feed the managers back on relevant information so that decision can be made on time. Management accountant this day must ensure that information they are providing is comprehensive enough, and not only comprehensive enough, it should be reliable, it should be made available on time as per need, it should be relevant to decision making as at now, it should be clear. Management information should be clear, unambiguous, it should be easily understandable. And as management accountants and performance managers too, we must ensure that the cost of providing the information will not exceed the usefulness of the information being provided. And also, we should be abreast of our time and provide using modern technique, target costing, life cycle costing. Move on to use product profitability analysis, segment profitability analysis, backflush, balance scorecard, activity-based management give robust information, relevant information to the management so that they can make relevant decision. If you are yet to subscribe, please go and subscribe. James Associates, like us, comment, click the notification button so that when we release new video, you can always have notification from us. So in the next video, we'll go into detail of all these modern day management accounting techniques. James Associates, your value to life, your value to your business.